Al Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. This is Al Rolls reporting live from the Forex Super Model building, about to conduct the weekly review, which is Monday the 23rd of November to Friday the 27th of November 2020. First stop, Professor Code and his variance analysis. Good morning, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 23rd of November to Friday the 27th of November 2020. So we're going to do some variance analysis on the models then. So if you look at the board, then I've already put on the weekly flows, which for that period. So this is from Monday the 23rd to Friday the 27th. Yes, correct. So and these are the 6 major pairs, their movements over that period, over the week. So the euro dollar went up 106 points, euro yen plus 135, euro pound plus 59, pound dollar plus 16, pound yen plus 65, and dollar yen plus 22. Now if you look at the actual pattern of the flows, you've got the yen being the unopposed negative driver here, so at minus 322. So the yen complex over the week lost 322 points. We've then got a neutral dollar, literally neutral because it's at 0, so that's the neutral rock. And then we've got only a very slightly positive pound on the week, 22 points, and the bulk of the opposing positive flows that have come out of the negative yen have gone into the euro at plus 300 points. So let's have a look on a day-by-day basis. So Monday the 23rd, the flows look like this: yen, euro, dollar, pound, plus, careful, steady, plus 186, plus 64 for the dollar. The euro was minus 2 and the yen was minus 248. So we had a negative driver in the yen, which was opposed, a negative rock in the euro, positive mover in the dollar, and a positive secondary driver in the pound. So that's what we ended with up after Monday's trading. And what did we suggest early Monday? Well, we were looking at what was the headline? It was, we suggested to go long long euro yen, pound dollar, and pound yen. And the flows, as you can see, for the euro yen over the week was plus 135, pound dollar plus 16, and pound yen plus 65. So on Monday, basically we had the yen being the opposed negative driver, with the bulk of the positive flows going into the pound, some into the dollar, and the euro being a very static, slightly negative rock. So we suggested, as we say, that arguably, yeah, no problem. Pretty much a tick on the situation. Looking at it from the weekly basis and on the daily basis, well, basically we're expecting yen weakness, which we got predominantly, euro strength, which was marginal depending on what pair you're looking at, and pound strength, which we got. So I think that was pretty successful from a modelling basis on the Monday. So let's have a look at Tuesday then. So Tuesday the 24th, the 11th. Yep, 24th, the 11th. Right. So what have we got? We've got dollar, yen, pound, euro. And the figures are +1 on the 3, +113 on the euro, +61 on the pound, -76 on the yen, and -98 on the dollar. We've got a positive opposed driver in the euro, a positive rock in the pound, a negative mover in the yen, and a negative secondary driver in the dollar. What did we suggest? Well, we suggested long euro pound. So early Tuesday morning we suggested long euro pound. And what did we get? Well, we got more flows into the euro, and the pound was positive, so it got some secondary backdoor flows. So we didn't get a full swing on the euro pound, but nevertheless we were pretty correct in that analysis as well. So another tick really. Let's have a look at Wednesday. Wednesday the 25th. 25th and the 11th. So what did we get on Wednesday? Yen dollar on the negative side, euro pound on the positive side, +60 for the pound, +58 for the euro, dollar -57, -61 on the yen. So the yen just scraped in as the negative opposed driver. The dollar was the negative rock, euro positive mover, and pound positive secondary driver. What did we say with regards early Wednesday morning then? We said stay long that'd be a good name for a hotel, wouldn't it? Stay long euro pound. Stay long euro pound. Now basically the flows were very well balanced on Wednesday. You can see that they're almost either late 50s or early 60s on, so we tended to get a fairly neutral situation there. Everybody was grinding away, so that we said stay long euro pound, and it was marginal, to be honest. The flows were fighting each other and fairly well balanced, so we'll give ourselves a bit of a neutral for Wednesday. So for Thursday then, Thursday, what was it, the 26th? 26th of the 11th. Let's have a look, what did we get there? We got pound euro on the negative. Pound euro on the negative. We had dollar neutrality and yen positive. So the yen was plus 83, dollar was pretty much 0, euro minus 8, and pound minus 75. So the yen was the positive driver, unopposed. The dollar was the neutral rock, euro was the negative mover, and the pound was the negative secondary driver. Right, on Thursday we said long euro complex, so EUR complex. And if the euro complex is euro dollar, euro yen, euro pound. And overall throughout the week the euro complex was plus 300 as the positive secondary driver, pretty much nearly driving but not quite. So so really you can't argue with us suggesting long euro complex. So we'll give ourselves a minor tick for that. And finally on Friday, let's do the last day of the week. So Friday the 27th of the 11th. What have we got? We've got pound on the negative, dollar, then on the positive side we've got the yen and the euro. Let's put the figures in. Plus 143 on the euro, plus 61 on the yen. The dollar was minus 27 and the pound was minus 177. So we've got a negative driver in the pound, which is opposed by the dollar. We've got a negative rock, a positive mover in the yen, and a positive secondary driver in the euro. What did we say? For Friday, we said neutral USD complex. So neutral USD dollar complex. Right, so what did we get? We got we had a negative opposed driver in the pound, and the opposing positive flows were going predominantly into the euro and a little bit into the yen, with the dollar being fairly static at minus 27. Now, if you look at the weekly flows, as I said, the overall net position for the USD or the dollar was flat at 0. So you know, we were basically suggesting that the dollar was in a position of static dynamic equilibrium at 0, which is basically what happened, and therefore really, you know, to be fair, that was fairly good. That was almost a golfer's hole in one there. So that was pretty good. Let's have a tick. Now, if you remember that Thursday and Friday of the week was this hole in the data, this window. We had the American Thanksgiving holiday. We had a data void, and Wednesday, late Wednesday, our time anyway, UK, we'd had the FOMC minutes, and we'd had American durables. Equities were pretty much on the up during the week, and so we had equity, standard equity transmissions to a certain extent, pushing funds out of the yen pairs, which we get, as we can see, during the week we had -322, and if you remember as well, going way back into some earlier analysis we did, if you look at the monthly flows for the yen complex, we as we said, the yen was particularly high, and there was plenty of elbow room for it to come down, and it has come down, and as expected to a certain degree. And we thought, basically, if you look at our headlines for the week, then long euro yen, pound dollar, pound yen. So we're suggesting yen weakness effectively, and pound strength and euro strength. Long euro pound was Tuesday. Stay long euro pound Wednesday. Long euro complex and a neutral USD complex. So the common theme really was we were expecting flows to go into the euro complex, which we actually got. We're expecting, towards the end, we're expecting dollar neutrality, and we're also expecting yen weakness off the back of equity transmissions. So really we got what it said on the tin almost. Now, regarding our trading, as you know, we're heavily long the pound. Not heavily long, we're 20% long the pound, but we're long over 38 positions, which 19 are short and 19 are long. Our pound positions peaked at over 2,000 points earlier in the week, and now we're quite significantly down on that. The pound has been degraded, particularly Friday, which was yesterday. The pound was sold off quite nicely in the market off the back of, well, quite honestly, off the back of moody negative Brexit news, and just the fact that there was low liquidity, and the pound really was in the frame for some negative flows, quite honestly. We accepted that because we're a long-term positional on that, or medium-term positional, and we'll just accept that we're going to get weeks where the pound, you know, is out of favour, and that towards the back end the pound was out of favour. Not drastically though, because it's still just the positive mover, but the key event really was the Kiwi, the New Zealand dollar. The New Zealand dollar, the pound New Zealand dollar trades were significantly down, as the New Zealand dollar was being used as the sort of default oomph trade during the low liquidity, and there was positive flows into the Kiwi, particularly out of the pound Kiwi, because it was just flavour of the month. We just had to lump that really, and we traded around. This position. We've got a euro yen hedge position, which is long, which is starting to do reasonably nicely, and the euro pound we recognised as a goer, but we didn't actually trade it. But it nevertheless, that has worked out reasonably well. So that was the week. I hope that was useful to you, and see you Monday morning for the standard daily briefing. Thank you very much. This is Al Rolls reporting from the lab. Professor Code seems to be quite happy with himself. We're now off to see the senior trader to review the week in a journal style fashion. Welcome again to the sort of journal style roundup of the week from Monday the 23rd of November till Friday the 27th of November 2020. Now, so what has the week been like for us? Specifically, from the view of the trading. Well, as you know, we're running quite a long largest position on the pound, long, 20% long. We've got 38 positions, 19 long, 19 short. We've been we maxed out at about over 2,000 points to the good earlier in the week, and we're now well down on that. Friday, the last trading day, we particularly came down and particularly decided to give the pound the elbow, and of course we're just in it for a longer period, so we expect these sort of weeks or periods where we're going to get, we know from our analysis that we're going to get bounced, and we just, because we're doing positional trades, then we just have to accept the fact that they're going to deteriorate, and they've deteriorated 600 or 700 points, not insignificant. Just have a quick swig of this. The pound Kiwi, New Zealand dollar, has yet again been giving the pound the elbow. It seems to be the sort of default trade where, after the repositioning, the sentiment change last week, or maybe even the week before, with the Kiwi on negative rates, it's the flavour of the month, and of course, what better to sell it against than the pound, who's going through a moody negative Brexit noise. So you're basically getting both barrels if you're long pound Kiwi, which we are. So that's just hard luck. We're hanging in there, and we don't foresee it being a problem. So with regards our other trade, which is the shorter swing, much lower level of exposure on that, on the euro yen, that's basically slowly moving into reasonable profit. We're about 25 points to the good on that. It's been swinging around. It started off positive and then had a negative period, and it dirged, and we're still technically dirging on it really, but it's moving in the right direction. And so that's really the trades that we're in. We've had to do some minor financial management on the Kiwi pound trade, as I said. That was really the highlight of the week, I suppose, was fiddling around with the pound Kiwi. Everything else has pretty much been left alone. So that's where we're at, and it's interesting, isn't it? The way the market speaks to you through the screens, and it always makes me think of the time when I went to a market once, not a financial market. It was like a I don't know, car boot sale, junk sale, whatever you want. And this, I was standing next to this woman who held up a plate to this seller, and she held the plate up, and then she sort of got his attention and waved it around a bit, and bit more waving around, and they looked at each other for a while, and then the seller basically went, like that, and she sort of thought for a moment and then went like that, and then she handed over her pound. So that to me was the ultimate in market communication. Not only very amusing, but quite efficient, and no speaking, just visual sign language, and arguably very effective. So that's what you want to think of when you're looking at your screens. I don't know how you trade, whether you're on a mobile device. I mean, what do people use these days? They're using their phones, and they're using laptops, those pad things. Yeah, sort of tablets. Are they called yeah, they're called tablets. Or like us, you're using the old donkey desktops, and but whatever you're using, you're still staring at some sort of flashing screen, and it always it could be worth thinking back to the lady at the car boot sale. What is the screen trying to tell you? And the other thing I thought this week was how we sort of get tied up into sort of a language in trading, and the language quite often is it's a technical language, in more ways than one, but it's how you pronounce things is always different. I mean, we always get into sort of like slang in our organisation, like the Swiss franc is always known as the chuff, so it's be like the dollar chuff, because that's just what we call it, and so we'll be buying the chuff or whatever. Now, and when you're talking about like indicators and things, so what is it? I mean, again, if you've had a proper education, you know how to say things, but if you've been sort of dragged up like myself, then you understand that we're not necessarily the most eloquent. So things like Fibonacci, or is it Fibonacci? Fibonacci, we call it. Well, Naki's always better to say than Nashi, isn't it? So we're more on the Naki side, to be honest. Fibonacci. But anyway, everybody knows what we're talking about. It's those percentage levels, isn't it, that people use? 61 point whatever percent. That's one of them, and so that's your Fibonacci, and that also takes me back to when I was at school. And yes, I did go to school when we were doing geometry and Pythagoras theorem, and one of the bright sparks in the class. I'm not going to claim to fame on it, but we used to call it, after this kid said, "What is this Pythagoras theorem?" Now, Pythagoras is obviously Pythagoras. Now that stuck, so whenever we used Pythagoras, we always called it Pythagoras, and to me that's not a bad name for it. So Pythagoras, Fibonacci, chuff, take your pick. So that's where we're at really today. Well, next week we're not really going to talk about in this journal. It's more a case of looking back over how we've been shafted or otherwise in the market, and we've had quite a successful week in terms of modelling short-term flows, but we've actually gone backwards in the trades, which is often the way. I mean, we're not bothered about it because we're in the sort of the dustbin, and we're not going to be shaken out. We like being in the dustbin. We've got a big dustbin. In fact, our dustbin is pretty much a skip now. So that's where we're at, and I hope you've had a good week, and I shall see you next week sometime. We're going to be doing a series on trading psychology, so the psychology of the process of having, being in the market, having account sizes, the whole sort of gambit. How you think, how you're told to think, how you shouldn't think, and all those sort of aspects. So that's what we're going to be doing next week. So it'll be part 1 of the trading psychology series. So look out for that, and thanks very much for watching. Having spoken to the senior trader, we're now off to see the risk manager and get his views on the way the week's gone regarding the lemons. Hi trading cats, you dig? I'd say the New Zealand dollar pound trade has given us 2 lemons this week. 2 lemons. Not dreadful, but not great. This is Al Rolls reporting from the Forex Super Model building, signing off.